This is Andrew from DeFiancy. All right, guys, we are dead smack in the middle of the U.S. session right now, and we are looking at the S&P 500's futures contract. We call that ES. And right now, we're looking at a range high. We just put in somewhat of a range high, maybe. We had a breakout off of this low of the morning, which was really triggered by something to do with Jerome Powell's speech that he had at roughly, I think it was at 11 p.m. Eastern Standard Time. It was like released before the speech or something weird like that, and the market just like had this puke moment. I guess algorithms reacting. And then it's from that point, it's really been up only. So this was a fantastic scalping day. I hope you caught some of these moves if you were trading it. But I think now we need to look at this we need to look at this ES going forward, the S&P 500, in multiple different ways. Okay, so this is a major move that we've had. I mean, it's a tremendous move off the lows of the year, or not the year, but the recent low back in October. Absolute monster move. The question is, how much do we have upside wise fundamentally? Or first technically, okay? Well, the first area of obvious resistance is basically where we are right now, a little bit above 4,600. So I expect to see a fight here. This is why I think that Sunday open is probably going to be red. This was a really nice day, and I don't think that it's necessarily topped out, but I do believe that you are approaching pretty significant resistance. This chart looks really good. You have this basing out effect, this accumulation structure that really became obvious really yesterday and this morning, making these consecutive higher lows. I would expect if it comes back to this 45.80 level that's now support. So expect, that's probably going to be a good long on a lower time frame basis. A higher time frame, I want to kind of zoom out here and just be realistic, right? Obviously, this is going to be a level of resistance. That's your previous top back in August, or I think it was actually July, end of July. And you can see how there's a pretty large gap between that level of resistance and what I would say is the next level of resistance, roughly all-time high, somewhere in here, right? And, that's about 2%. So we're not really far from close to all-time high. Because this is such a large gap, I know you might be thinking, like, why does it matter that there's a gap there? Typically, when you have a gap like that, where it's like, this is definitely going to move aggressive if it breaks, it takes a little bit to do it. Usually, okay? It's not a rule or anything. It's just something that you'll notice if you go back and look throughout time, history, is that these kind of technical setups will take a while to play out sometimes. And I think going into the end of the year, that's even more likely. Because traditionally so we said that end of year rally is very likely that has taken place, but that doesn't mean like literally all the way through December. I think you'll have over the next few weeks more low volatility, choppy price action, and we're at a range high. We're at the high of the year, almost, right? So we should expect that you're probably going to have a down week. I mean, it's been 1, 2, 3, 4, about to be 5 if it closes out green. 5 weeks straight of up only price action on the weekly. That's not exactly normal. It's not exactly unheard of. It's happened before, as you can see in the past. But as you can see in the past, when we had this enormous stretch of up only, there was still moments of downside, right? As you can see. So I would expect that we're probably going to have a red week next week, or the week after that, but probably next week, in my opinion. Not a rule. It's just saying route resistance is not likely to break it very easily. Now, if it did break it, that would be pretty impressive. But right now, I'm leaning that you're going to start to see more caution, in my opinion. Does that mean I'm bearish? Absolutely not. I think this market will go up higher later. I just think that if you're a poker player right now, the risk reward is starting to get pretty heavily skewed in a temporary pullback's favor. Okay, just considering the move we have at resistance, going into a typically choppy, low volatility month, add in that, just that whole bowl of variables there is saying probably pullback. Again, not a rule. If it doesn't happen, great, but most likely. let's take a look at gold. We had talked about this because gold's almost at all-time high. It may have even made all-time high today. It's right at all-time high. We had talked about gold and how I had the most bullish chart I've ever seen, basically, in some ways, I guess. And I really mean that. I think this is just an incredible chart, incredible upside, I think, with gold. I think it could quite literally go to 3,000 within maybe a few years. That's a huge move, by the way, if it went to 3,000. Like a 50% move almost. I don't know when that would be, but I'm going to go into why I say 3,000 and ultimately maybe 6,000. And that's over a big stretch of time. We'll go into that into a minute. But I think we need to really look at gold and say, why is gold going up? This is a massive signal, a flare, that the market's shooting up telling you, hey, pay attention, something's happening. Gold is a huge asset class, $10 trillion. And it signals something. What is it signaling? This is a chart of gold versus global liquidity and US CPI. So CPI inflation. Now, you probably are not actually seeing this very close up, and I'm realizing that now. But if you can see this orange line, that's gold that dates back to 1970 up until right now. And this black line is global liquidity. Notice how gold is effectively a function of global liquidity and not necessarily a function of CPI. Although people oftentimes, and I wish I could zoom in, it would probably make more sense. That bottom line is CPI. I guess what I'm trying to say is monetary inflation is different than what's called high street inflation. Monetary inflation means the Fed is printing money. High street inflation, okay, or let me go back. Let me explain that a little bit more. When someone says monetary inflation, what they're saying is that the dollar is being devalued by the Federal Reserve. But that is not necessarily the same thing as saying when we're talking about the CPI. We often conflate the two, okay? People think, oh, if there's a high CPI, that's good for gold. Not necessarily. CPI is a basket of goods and services, and the cost or the inflation or deflation of those goods and services actually can be changed. There's variables, there's dynamics involved outside of the Fed. What do I mean by that? A TV in 2022 versus 2025. Did TVs go up that much? Not really. Did technology have anything to do with that? Yes. So what I'm trying to say is there's certain goods that actually have that get cheaper as technology gets better at producing them, as manufacturing processes get better and better and smarter, the cost of things actually can go down. Okay? So what I'm trying to say is people they really got to understand why gold's going up. Gold is not going up because of CPI and because meat's more expensive or houses. Well, let me the housing thing, you can make the case that those are related, but gold is basically a function of monetary debasement is what I'm really trying to get at. And that does not necessarily mean high street inflation, which is your CPI, what people, are talking about most of the time on CNBC. They're actually two different things for the reason I just said. So if you really want to understand why gold's going up, it's going up because it believes that the Fed is going to have to devalue the dollar a lot over the next decade. This is not small money that's absorbing that gold right now. These are central banks across the world, not the United States, not the G7, but China, Russia, and I'll actually show you what I mean. This is the BRICS nation group, which is like China, Brazil, India, South Africa, and Russia. Okay, their combined gold holdings has been creeping up for a while now, but it's now, if you combine all of them, has surpassed what the United States has. Why is that happening? So some people will say, oh, BRICS currency is not, that's a fad, that's not going to be used. And I agree. I think that's a bunch of BS that a BRICS currency is going to replace the US dollar. Forget about that for now. What you should be asking, though, is why are they buying so much gold? Well, the reason they're buying so much gold is because of monetary inflation. Okay? And this is really important to understand, in my opinion, for why stocks are going up. Okay, so we're going to go into that. But let me just show you something. So this is and again, I hope you can see this. I'm sorry, I know you probably can't zoom in, but this red line is the Fed's balance sheet. So when you hear someone say quantitative easing or quantitative tightening, what they're talking about is putting assets on and off of the Fed's balance sheet. This gold line is Fed liquidity. This is really, really, really important to understand if you're going to forecast into the next year, into the next few years, and understand really why stocks and gold are going up. Fed liquidity, which was expected to go down because of quantitative tightening, meaning assets are coming off the balance sheet, was expected to go down. So Fed liquidity, and by the way, it was, back in 2022, Fed liquidity dropped off pretty significantly, and then it bottomed roughly in 2022, into 2022, right? That's when the stock market bottomed, if you recall correctly, and also crypto shortly after that. And you had a big pump, and then it started going sideways. But you notice how it's on the upswing, even though the Fed is doing quantitative tightening. Why is this happening? And I'm going to tell you why. Because the Fed is injecting liquidity through other means that people aren't talking about. So they're basically saying they're trying to have their cake and eat it too. So they are assisting the financial markets with liquidity, i.e. banks. So this really started to speed up back in early 2023 with the SVB. If you don't recall what that is, it was a banking crisis where banks were having a lot of issues with liquidity, if you remember correctly. Well, the Fed was like, oh, well, we can't have that. Here's some money. Boom. Big increase in liquidity. And it's been really, I mean, it did go down a bit, but it's been going up ever since. The Fed has different ways of introducing liquidity into the market. Okay? And it's important to understand this because, number one, the fact that they did that in the first place shows you that the Fed's not going to let them, they're not going to allow the market to break apart very easy, the financial system. They do not want that. Okay, that's kind of obvious, but why am I mentioning that? I'm mentioning that to say that this red line, which shows that the Fed balance sheet is going down, there's no way that they're going to keep doing that, which would be, once this starts to turn around, the bears will literally have no ammo at that point. And why would it turn around? So why would the Fed put assets back on their balance sheet? I'm going to show you why. This is the U.S. and United Kingdom's public debt per GDP. As you can see, the United States has been basically up only since the 1980s. Why is that important? And by the way, we're about right here before this gray box. Why is that important? The reason why that's important is that debt has a direct correlation with that balance sheet. How does the United States pay for things? They have to print money. Okay, well, how do you print money? And how does the Fed pay for their debt? They have to buy assets at some point. They have to buy treasuries at some point. They have to put those back on the balance sheet. So as this debt goes up, they have to pay off that debt, which means they have to print more money. They have to buy assets back on their balance sheet. This is why gold is going up. So everyone's like, why is gold going up? Why are stocks going up? We mentioned monetary inflation and high street inflation. Well, asset inflation is mostly correlated with monetary inflation, not really so much with high street inflation, but there's a little tiny bit of correlation there. It does contribute to asset inflation. Why would you sell a tech stock if you thought earnings were going to be good and the Fed is about to inflate the monetary supply, which inflates asset prices like houses, like tech stocks? Why would you sell? Why would you not buy them? Considering they're at a discount to some extent. They're still overvalued if you look at different index, different ways of looking at that. But what I'm saying is maybe they're overvalued for a reason. because they're probably going to be inflated even more. And gold is the best indicator right now, and Bitcoin for that. So gold is basically Bitcoin is basically digital gold. But I was really wanting to show you gold and show you this to understand why the stock market is going up, because that's what's confusing people. Some people are like, oh yeah, I understand why gold's going up. The Fed's going to print money in the long run. Well, that same argument, which is oftentimes used by bears, is why stocks will go up too. Maybe not all of them, okay? But why wouldn't you want to own Google and Microsoft and an AI technology explosion, right? When their profit margins are probably going to be going up when this happens. I mean, isn't it kind of common sense now when you look at it from this perspective, right? That, okay, yeah, they should be going up. So I don't want to ramble too much about this, but I think it's really important sometimes to dive into the fundamentals, to understand the technicals, give you a little bit more ease, when you're sleeping at night, holding a thesis that you may have had just with technicals that have looked great. There's a reason for these technicals. The chart is just the market, right? And the market is right most of the time, okay? Depending on who you ask, some people will say that's wrong, but I think it's better to say, hey, there's a lot of smart people that are involved in this market, and they see something. Let's talk about Bitcoin. So we talked about gold. Bitcoin is digital gold, so it's a better gold, and I'm not here to convince you of that. I just think you will see that at some point if you live long enough. It will be common sense that Bitcoin is a better gold. It has superior qualities in many respects. And I think this is why Bitcoin's going up. So obviously we have a narrative. We have the halving. We have obviously ETF and stuff. But I think Bitcoin is maybe an even better signal in terms of global liquidity. So that stuff we just talked about with gold, Bitcoin might even be a better flare because it's more on the farther end of the risk curves, showing that, yeah, if people have funds to put into Bitcoin, then yeah, there's definitely, global liquidity is definitely rising. People have money to spend. Now, I think people will view it as a monetary inflation hedge later. Maybe they already do. But I think that you're going to see a narrative develop later that people already understand now that are real Bitcoiners, people who have been buying this for a while. They understand that this is a monetary inflation hedge. But I think that becomes the narrative in 2024 and 2025 when it becomes clear that the Fed is going to go back into quantitative easing. They might not call it quantitative easing, in case you don't know what I mean by that. We just talked about it, but they're putting assets back on their balance sheet, and they're printing money. Okay, those are two different things, but oftentimes conflated, right? To pay for the debt that they're going to be needing to pay for over the next few decades. You saw that estimate, right, of debt to GDP. Well, if there's only 21 million Bitcoin, it has scarce properties like gold, it should benefit disproportionately from that. And that becomes the narrative, I think, in 2024 and 2025, which really sends Bitcoin flying, is that, oh, this is the ultimate inflation hedge. There's only 21 million Bitcoin. You can't, there's a 2% inflation rate roughly with gold because there's new gold being discovered. We don't know how much gold there is on the planet. Some will say that we're running out of it, but it depends on who you ask. There's only 21 million Bitcoin. So people will see this as the ultimate inflation hedge, in my opinion, and that becomes what really sends us up to 100K, 200K, 500K probably within a decade, if not less than that, in my opinion. So I'm really excited talking about this, obviously. I think, when I see gold doing what it's doing, I know that Bitcoin's coming next. And that's really something to be excited about. Now, altcoins do not equal Bitcoin, but typically altcoins do benefit from Bitcoin going up as liquidity within the crypto ecosystem goes up, and that oftentimes will kind of funnel down into altcoins. All right, guys, I think that's all I want to cover today. Have a good weekend, and until next time, happy hunting, friends.
Hey, thanks for watching. Be sure to like and subscribe to our channel if you'd like more updates like this, and let us know in the comments, what do you think about today's video and DeFiancy update and insight? Also, make sure that you join our Discord, our free community chat, where we discuss things like this, what's going on in real time. Typically, our Discord community is the first to know what's happening, and we would love to see you there. Check the link in the description, and until then, we'll see you in the next DeFiancy Insight video. Bye for now.